Good afternoon. You're watching Business World Live. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Monday. All right, local stocks traded in the red all throughout the session, but another last-minute buying buoyed activity this Monday. Shares ended the week's first trading day in the green, up 0.1% to 6,917.49. This is a PSEi's highest level yet since the start of March, and marks a 12.2% increase since the bourse's 2021 low of as much as 6,164 back in May. Now, it doesn't hurt that offshore investors were net buyers as well today, with net purchases at 20.4 million pesos. Now, this positive movement in the index comes ahead of the current GCQ, with restrictions lapsing today in NCR Plus and Metro Manila mayors agreeing to shorten curfew hours from 12 midnight to 4 a.m. But will restrictions be eased in the capital and nearby provinces? Well, the palace highly doubts that restrictions will be loosened up to MGCQ and that a normal GCQ is more likely. The president is set to decide on the next status of the NCR Plus tonight, so we're going to keep tabs on that one. But one other development here, flights bound for Cebu. Well, CNN Philippines is reporting that, quoting Palace spokesman Harry Roque, they're saying that Cebu is now accepting international flights again after the order to divert Cebu bound flights to NAIA has lapsed. That sent megawide shares rising, climbing close to 4.5% to 7 pesos a share. But Malacanang said that the president has finally ordered Cebu to abide by the IFTF's policy for arriving passengers. So that includes a 10-day quarantine and a 7th-day swab test for passengers from abroad. Now, we'll give you more details on those quarantine developments later. But for now, in the equity space, one big mover that we have to be keeping an eye on is Converge. That's after it got listed in two indices in the London's Financial Times Stock Exchange. So those are the FTSE Renaissance IPO Index and the FTSE ASEAN All Share Index. Now, this is expected to boost interest among international investors. Following that news, you have Converge making heavy gains here to 21 pesos and 90 a share, but tempered that rise to end the day at 21 and 60, still up 0.7%. But if there's any big gainer, that's definitely going to be BDO. The stock is a day's best performer, up 4% to 114 a share. You have three other stocks here increasing more than 3%. You have Emperador, DMCI, and Aboitiz Equity Ventures. Now, also extending its winning ways is ICTSI. The port operator edged higher today by 1.8% year to date. It has already increased by a fourth, making it the year's best performer so far. On the downside, however, you have Ayala Land, the day's worst performer, down 3.3%. Here are other headlines we're keeping our eyes on. Local officials in Metro Manila have agreed to ease curfew hours starting June 15th. Curfew in NCR will now run from 12 midnight to 4 a.m., 2 hours shorter from the previous curfew of 10 p.m. to 4 a.m. MMDA Chairman Benhur Avalos says this is to accommodate late-night commuters and some LGU's vaccination programs. But even with improving COVID-19 conditions in the capital region, the palace thinks the restrictions in Metro Manila will unlikely be downgraded to modified GCQ. President Duterte is expected to announce new quarantine classifications tonight. Now, over in the power space, the Energy Department and the National Grid Corporation of the Philippines are not yet done with the blame game. The DOE insists the regulator should comply with its obligations to secure power supply reserves and reduce its transmission fee. The department adds that NGCP isn't limited to procuring reserves from existing power plants and that they may engage in forward contracting. But the NGCP stands firm that the problem is power supply and not transmission, which is what they are providing. NGCP spokesperson Cynthia Abalanza spoke to Businessworld Live earlier today, saying they should not be made responsible for the supply issues. Abalanza says it's the generating companies that should be given a boost. She says thinning power supply could be expected again by the end of the month and possibly by the end of July and early August. Now, G7 leaders have concluded their meeting in England where they forged a united front on issues surrounding China. Michael Smart, Managing Director at Rock Creek Global Advisors, discusses other key takeaways from the G7 meeting, what they hope to accomplish, and how they can do it. He speaks on Bloomberg Markets, so let's take a listen.
He did. I think Joe Biden likes to say that with his presidency, the U.S. is back. And with the communique out of the G7 today, I think you can say the G7 is back as the primary forum for democracies, the advanced democracies with big economies, to take charge of setting the rules and trying to address some of the big challenges of the day, whether that's pandemic response, economic recovery, climate change, rules on technology, and human rights. And so in that sense, there was a strong sense that these values need to be leveraged to tackle these big problems in a way that the G7 has not been used in the recent past.
Can we take that into action, though? Because that's a completely different thing altogether. And the reason I bring that up is, yes, you have an agreement on paper, but you already have some disagreements. We heard from the French, we heard from the Germans, for example, not to mention, of course, directed at China, for example. And a lot of these other countries have quite a robust economic relationship with the Chinese. In what way do you think this becomes action?
You're absolutely right. That compromise is evident in this text. Most of the criticism is implicit of China, whether it comes to international financing of coal projects or unfair trade practices, or even in the area of human rights. They take a rather implicit approach. And so now the hard work really begins, where the trade ministers have to hammer out these rules about how the trading system needs to be reformed to address China's industrial subsidies, how these targets need to be hit with ambitious actions between now and 2030, especially. What actions specifically will these democracies take to address the issue of imports using forced labor coming into their markets from Xinjiang? And so while they have this strong statement of shared values, there's a lot of policy detail that now needs to be fleshed in if Biden is going to realize his goals of meeting the competition from China in all of these areas.
And which among those items, Michael, do you think is, I hate to use the phrase lowest hanging fruit, but which is the most doable? Let's put it that way.
Well, I think the Biden administration scored an early victory when it persuaded other countries to impose sanctions on certain Chinese government officials for China's policies in the Xinjiang region and the abuse of human rights, forced labor, detention camps, et cetera. So I think you will see more action on that front, which is a big priority, not only for the administration, but for the U.S. Congress. Secondly, they'll need to see more progress on something that your reporter mentioned on finance, climate finance, helping developing countries meet their targets and adapt to the challenges of climate change. So increasing both public and private financing for that purpose is also an important area of work for the balance of 2021.
And the other side of that is what does this mean for the Chinese? I mean, do they walk away, not walk away, do they look at this after the G7 and say nothing's really changed? Or do you think the group G7 has come out of this with a little bit more leverage?
I think they have come out of it with a little bit more leverage. Let's be honest, China is not showing that it is feeling intense pressure to change current policy in these areas. But this beginning of a more united front, more coordinated action on these issues will begin to apply some pressure to China. And the effects, could be diplomatic in terms of trying to maintain a sense of global leadership. but also economic, because companies right now are making choices based on the direction they see the G7 and other Western governments taking. And what will it mean in terms of foreign direct investment into China? What does it mean in terms of access to export markets? China has to take into account the fact that it's not just the United States anymore that is contemplating restrictive measures in these areas, but other G7 governments as well.
And those are the biggest stories this trading day, June 14, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.